Let's see. Put in these value areas from the developing week. So I'm gonna go to the volume profile. If this thing will load properly. So I'm gonna go to week, and then I'm gonna go to developing, and then I'm gonna put on the week's developing volume profile so I can see exactly where most of the trading activity occurred this week so far. So I can kind of just group this together already. Right about here to here. No, we'll leave that blue for now. But that's where most that's where most of the trading activity occurred so far for this week. And it's really the only value area we have to go off of because we've been trading at all-time highs. So because we've been consolidating yesterday from, let me put this back over here, from Tuesday all the way to this morning, kind of breaking out of that range now. It's the only level with concentrated trading activity to go off of at all-time highs. Yo, what's going on, Vermin? Are you using NinjaTrader? No, I'm using ExoCharts right now. So this is an order flow footprint chart software. One second. I'll load some other charts here in a second. But right now we're looking at NASDAQ. We have FOMC interest rates later today, so we may get some volatility ahead of that. But up until about 10 o'clock Central Time, so 11 o'clock Eastern, we'll see if there's some opportunities in the market. But other than that, we'll be patient. We'll wait for the announcement. Most opportunities might come tomorrow, Friday, a couple days after FOMC, but we have a lot of downside that we could potentially put in if we zoom out a little bit here, but we'll get into that in a moment. Let me fix a couple things real quick. Was there absorption before the drop? Let me go over here. There was really nothing too significant. I mean, there was a little bit, but nothing too significant to really call like an official absorption. But we're getting a little bit of absorption right now. It's going to be interesting to see if these levels hold because you can even see on the 5-minute we have negative delta. Well, now we're kind of flipping red on the candles, so we got to be patient. We got to wait for the candle to close. But briefly for a moment here, you can see that that candle has negative delta, but the candle is now green. So you can see that the aggressive sellers in this candle right now are getting absorbed by passive buyers. But we also need to see how long that lasts too. But it is interesting to see. We can see there's a presence of passive buyers at these price levels right now. So more absorption going on right now. Really what we're going to look out for is to see how price responds off this value area low right here. Because it's the only level of value to trade off of right now. It doesn't mean you have to trade, but that's the area of interest right now. And that exact price point is going to be 24,512. We're looking at NASDAQ right now. See a lot of absorption going on right here. So we could kind of see that absorption going on before it was a little bit more obvious right now. What time is it? 8:40, 18 minutes into market open. I want to put 300K in NASDAQ. I just sold my house. Should I do it or buy another house and rent? I'm not a financial advisor, but I don't think a financial advisor would advise that. I'm no rocket scientist. I'm no dentist. I'm no orthodontist, but I don't think a financial. My bad. I know the lighting's really weird with all the bright light behind me. Full port short NQ. I mean, we got FOMC coming up. Let's see what we get here, how price responds. We have FOMC later today, and we got a lot of room to the downside. Let's zoom out. Let's go to the let's go to the 30-minute. Said full port NQ. Not financial advice. The market has been putting in higher highs, higher lows since the beginning of April. This is going to be one of the first times that the Fed is cutting rates in a long time. That's why this time is a big deal. We get these interest rate announcements every single month, but the reason why this is a really big deal is because of the fact that we've been raising rates for a while to be able to tame inflation. When we raise interest rates, it slows down the spending in the economy, right? And when spending slows down, inflation slows down. When inflation slows down, we don't have to keep jacking up interest rates. Not that we're even at the benchmark that we need to be at right now. We're going to start cutting interest rates because also things might start breaking if we don't start cutting interest rates as well, because we've had interest rates elevated for a very long time. And the thing that's concerning is we've been jacking up interest rates. A lot of asset prices are still extremely inflated. I mean, not to mention the housing market. I mean, not to mention the stock market at all-time highs right now when we might get one of the first rate cuts. Like, of course, we're trading at all-time highs when we might get that 25 basis points cut. But that's why this one's just going to be really interesting, because it's going to be a change of character. It's going to be a different environment that we're going to be trading in right now. We've been trading in, again, an environment where we've been raising interest rates the entire time. And we also have a new generation of traders that got into the market, especially within the last few years. And within the last few years, we've only been jacking up interest rates. So how is that going to affect the market environment? I don't know. But volatility has been kind of dead lately. So maybe we get a pop in volatility. But if we get a pop in volatility, maybe we get a pullback in the overall market. And I mean, we're at all-time highs. So if we get that, this is a great time for the market to do that. We just saw a massive level of absorption here a second ago. So random vibes, you were talking about absorption, and I mean, this is like one of the most perfect examples of absorption this morning. Look at the negative delta. I'm on the 30-minute candle right now, and you can see all the negative delta here, and we're almost going red to green on this candle. I mean, all these aggressive sellers getting absorbed by passive buyers. This is one of the more obvious ones that I've seen in a little while too. And another thing, because this is a delta divergence down here, these are the D bars. It just gives you a visual representation of delta. You can see delta's over here making lower lows, right? We're making lower lows on delta, and we have not made lower lows on price. So are the aggressive sellers getting rewarded right now? No, they are not. If anything, aggressive sellers are getting trapped. And longs are getting wicked out of their positions. Morning, bro. Morning. Tijin. We're not really doing too much until the FOMC announcement later today. What time is it? It's almost 9 o'clock. This will be interesting if we can come back and take out this low if we don't get any price acceptance back inside this level of value, especially after getting rejected off of here after we zoom back in on the 5-minute. Because if we come back down here to these lows, um, we have more room to the downside. But is the market really going to make a run in these low probability conditions right now? But I mean, if the market did want to make a run, it would have to come back down here and test these lows, obviously. But we would need to see a lot more volume kicking in around these levels. But starting to see some imbalances on the bid, some aggressive sellers stepping in. We'll pay attention to this delta divergence down here at the bottom too. That's one of the best ways to view if aggressive sellers or buyers are actually joining the move. I'm using EXO charts right here. D-Maze. NQ's been at all-time highs for quite a long time now. Yeah, and I mean, that's why it's not going to be a surprise if we get the pullback. It's not too much of a question of if we're going to get the pullback. It's a matter of when we're going to get the pullback, and when we get it, are you going to be able to find a great opportunity to get decent risk to reward and catch some of that move? That's really what the question is. Let's see. I'm on the 5-minute right now. I don't really use the 1 minute on a footprint chart at all, really. I was gonna say sometimes I'll go on it, but not really. I don't really use the 1 minute too often. I think the 1 minute has a lot of noise. I think the 5-minute is a perfect sweet spot for something like order flow, because you get to see those orders accumulate inside one candle a little bit more. You get to let those orders marinate a little longer on like a 5-minute candle. Maybe we want it. It looks like we might take it. Maybe the market. I mean, the market putting in a run ahead of FOMC would be crazy. Let's see if we can take these lows first, though. Maybe the market makes a run ahead of FOMC so that it can position itself for the move that it actually wants to make. We'll think of it that way. Getting more aggressive sellers stepping in here. Do we want the lows though? Oh yeah, we're taking them. Oh, and we're getting more imbalances. Let's see if they'll stick though. There was a group of orders sitting right here at these lows, whether that was a group of stop loss orders too. Might have to look a little bit closer at the open interest to see if that was opened or closed orders, but you can see that bid getting aggressive right there. got some fat orders on the offer right there. I'm gonna. Oh, okay, there we go. Dang. I covered. I covered a contract here. There was still more room to the downside. I had that feeling just now to where it was like there's still more room to the downside. We just took out that morning low paired with the low from yesterday. Price is stalling at this level, and I mean it is ahead of FOMC. We are trading at all-time highs, so I'm fine with covering there. It was one of those moments where I was like, am I gonna, you know, one thing that I was just thinking about just now before covering this position, which I'll show you here in a moment, was if the market retraces back up to here, like I wouldn't have wanted to sit in that, because even if we get this retracement move, my trade thesis isn't invalidated, but I don't want to sit in that. I don't want to give back 70% of the move right now to potentially capture, you know, a larger move down, especially because when you're not able to size in the amount you really want to size in and then take some contracts off. So it was one of those thought processes where I had to think, is that a potential move I want to sit through? No, I didn't want to sit through this because, again, it's not that it's invalidating my trade thesis, but the mental capital to sit through something like that again. But then at the same time, you have to ask yourself, when you cover down there at the lows, are you okay if the market continues to spill lower? So I think because of the market conditions for today and because it's ahead of FOMC, I'm more comfortable, you know, covering at the initial targets rather than looking for larger moves in the market. But those are just like current thoughts right now. Oh, I'll pull this over and I'll show you the entry and exit. This is this is my Tasty Trade account. This is a live Tasty Trade account you can see down here. But this is on the TradingView interface, which is a little different. But we got the black and blue theme vibe going. But this is the entry that I was talking about, and then this is where we cover down here at the lows. It's one of those things, again, it's like we have potential, we have more room to go lower, but even if we put in that room lower, it doesn't mean that we don't retrace a little bit and consolidate before we put that low in. It's like, do you want to sit through that? Even if it doesn't invalidate your trade thesis, you might have to sit in that for like another 30 minutes if you don't cover right now here at the lows. But at the same time, if you cover at the lows, we could continue to run. So it was one of those situations. But with lower probability market conditions, you'll be a little bit more comfortable I'm more comfortable just covering at the initial targets. Hold on, maybe I can just merge these real quick. We'll do this real quick. So I'll go boom here, merge that right there. And there we go. We got the order flow and we got the charts. And now maybe we put in new lows here. The market's still looking pretty heavy. The delta was starting to catch up with price, which was nice to see. But I don't mind not being in this mood just because we're trading at all-time highs still. So I got to remember that we're trading at all-time highs right now. If you want the full screen of this, you can go on the YouTube. I know it's in the landscape version right now, but you just can't see the order flow in the charts as well in that or in portrait mode. So if you got your computers on you and you want to watch it like this, or your phone, you just want to go on your phone to YouTube, you can watch it and just turn it sideways. Hold up, let me see. I think we can go to trading. Let me show you. There we go. That's my fear exactly. I don't want to go against the trend, but following the trend at this point feels even more risky. Yeah, I feel you on that. Vibes. I'm just excited for this potential downside we could put in. To be honest, I won't mind if we hold up here all day until the announcement, and then we do something to where we get some bearish order flow up here, and then we can trade down to these levels. I would prefer that to happen. I would prefer us to hold, maybe get some more absorption up here, and then some type of downside move later today. Because what would surprise me, I would be really surprised if before the announcement we somehow sell off all the way down to these levels. I'd be pretty surprised if we got that. But I wouldn't be surprised if, hold on, let me take this off. I wouldn't be surprised if we take out this low, but maybe we put in a new low, maybe somewhere around here. Maybe we don't sell off all the way down here. But I wouldn't be surprised if maybe we put in a low. Once the announcement drops, we rip to the upside, some type of crazy manipulation move, and then we come back down and take out that that low, wherever that low is going to be. And then we go down to these lower levels of value down here that we see. But if that scenario plays out, obviously, I'd be very prepared for it, or we'd be very prepared for it. But also, who knows? It doesn't even have to play out that way. Sometimes you can kind of just map out different scenarios that are likely to play out. And then if it does play out, it's a little bit easier to see it playing out. So it's easier to execute on it in live time. And then kind of just pairing that context with, market profile. Where are those gaps in the market? There's a huge gap over here. I mean, if we go to the TPO, you can see on the TPO, I mean, it's like air right here. This is one of the reasons why you're getting such a aggressive response whenever price is trading down here at these lows. You're getting some really aggressive wicks because this is a huge pocket right here. So any type of price acceptance inside of this pocket, you could see a decent size move to the downside because it's such a pocket right there in the market profile. The lack of liquidity in those areas is what will, increase that volatility in the market because it's going to chase those orders down lower. And if we get price acceptance down in these levels, auction market theory tells us that the market is always going to look to seek fair value. So if the market goes in price discovery mode, we're going to look to see if price can target the next level of value or the previous level of value, which is this level down here that we were looking at. Can I access the live data on Excel charts without having to pay for external data feed? I don't believe so. I believe you do. You are going to need to get that data feed and plug it in. Unfortunately, maybe a competitor will come out there and have that included in their subscription model. Maybe they can have some type of deal with the data providers and they can get a nice little bundle, and maybe someone does that and competes with them. But no, right now you'll still have to plug in your data feed. What are you looking for? Just got in. Right now we're not looking for too much. We took a short earlier off this value area low. You can see we got rejected here, and then we went to target the morning lows, which was also the previous lows from the previous day. So I mean, we traded that. We were targeting those levels. Now we're kind of just consolidating. We have the FOMC interest rate announcement later today. That's really what we're waiting on now. We need to see how the market is going to set up before that. But we've been noticing there's a lot of room to the downside. We were looking at the market profile to determine a lot of those things. And the next level of value to the downside is going to be around that 24,292 area. So if we do end up selling off after some type of manipulated move that the FOMC is probably going to give us, we would look to target these lows down here because we were talking about how we can see we have a little bit of a pocket right here of a lack of liquidity to run through. So that's what we're looking for. But we're ultimately just waiting for the FOMC announcement because we're trading in low probability conditions right now, waiting for it. You're going to be live for the FOMC. I'm not going to be live for the FOMC, but I will be live later this evening. So we'll do a little bit of a recap. And maybe for the next FOMC, we'll go live during it. That'd be fun. I'm in longs with a big stop for cuts. I'm in longs with a big stop ready for cuts. I hear you. Yo, Miguel, what's going on, bro? Deep Charts platform is coming soon. Deep Charts. That sounds fire, bro. Longs with a big stop ready for cuts. I hear you. Not the most favorable market conditions, but as long as you got that risk intact. We did sweep those lows. That was what we targeted over here on the cover from the short position. It's going to be bittersweet if we continue to sell off. It's going to be bittersweet. It's a good cover, though. I think that was the right decision. Volatility kind of dying right here. I mean, volume kind of dying over here right now. Miguel, you got to, bro. You got to. And when you do, brother, you got to just look into some of those order flow concepts and pair it with whatever trading style you're using. David, what's going on, bro? This downtime in the office just has me looking at charts without putting any trades in. Hey, you're practicing that discipline, though. Just sitting there, sitting on your hands. You know, guys, I think we caught, if there's not going to be another directional move until the announcement and we just chop around, I think we caught the one move that the market's going to put in before the announcement. I mean, we sold off this morning and then we retested those same levels from the morning and then we sold off from there. And then we covered at the lows, which was, let's go ahead and just mark it off real quick, which was over here. You know what? These were the previous day's lows, but these were the pre-market lows over here. Bro, what? Is that line white? I can't see that. Okay, yeah, we covered at the pre-market lows. Which was pretty much equal lows with the morning lows. So we were a little bit more convicted in that profit target. I've been looking into a bit order flow when I joined the community on school. I got you. No, yeah. I mean, I pretty much use it for NASDAQ most of the time. I know some guys are trading gold a little bit more. I hear gold trades really well during Asian session. Like, I've looked at gold during the New York session, you know, completely different personality from ES or NQ. But need to be looking at gold a little bit more. But I hear it's nice during Asian session. So whatever asset you choose to look at, I think, you know, some of them have some pretty solid sessions depending on which ones you're looking at. Gold trades really well overall. Yeah, we can look at it real quick. I got it pulled up. Let me see. Down here, I think it's on group 1 over here. I have it. I got a free order flow cheat sheet for you, bro. If you message me on Instagram, I'll send it your way. It breaks down some of the basics of auction market theory, the footprint charts, how to read the bid and the ask spread with the footprint charts, those kind of things, just the basics. And then you can look at some of those concepts, some of the terms, and then you can dive deeper, do more research with some of the new terms you learn in there, and you'll find more info on it. So I'm looking at gold right now. Let me go on the 30-minute to start. I'm going to go on the 30-minute. We'll go back to NASDAQ here in a little bit. NASDAQ is slow and kind of bummy right now because we got FOMC. Gold has been moving. As you can see, I was looking at gold. I was putting in some levels on gold so that I could remind myself to start looking at this market a little bit more. I trade NASDAQ a lot because I have the most experience trading NASDAQ and I'm comfortable trading NASDAQ. I understand the setups. I understand the order flow, the flow of the orders, all of those things. And the pace of the orders, the feel for it, all those kind of things, the volume, how thick the market is, how thin the market is, the personality of that asset, like it's all different, right? So Going from NASDAQ to ES, it's more of a correlated asset. And then going from trading something like NASDAQ so much in ES to gold, you definitely feel the difference in asset. But gold's been really volatile lately. So let me put out this value area and then we'll zoom back into the 5-minute chart. Go here. Now let me, you know what? I want to see what it's been doing this week. Okay. We're at a pinnacle point right now. I mean, we're trading at the point of control. So we got the point of control sitting about right. So it's getting rejected off the point of control right now. Changes color. Can't really see it. I'm colorblind too and can't see that. That's a little bit better. Getting a lot of volume traded at that point of control on gold. NASDAQ trying to take the lows over here. But we don't trust NASDAQ today. You ain't fooling nobody. This is ahead of FOMC. You ain't fooling nobody. Nobody's getting short right now. Nobody's looking to take those lows, bro. Ahead of FOMC, get out of here, NASDAQ. Can you show me that high volume node? Kind of confused what you marked there. Which one is that, Xavion? This one is on gold over here, and what was it on? I had marked out the value area over here on it. Again, if you do want that order flow cheat sheet, I have, I think we talk about value areas on it. But also just look more into how to use a volume profile. I've also made a video on volume profile on YouTube if you want to check that out. It's like 10 minutes. But it breaks down what value areas are, why we use them, and pretty much why they're significant. Jonas, what's good, bro? What footprint chart are you using? I'm using XO charts right now. NASDAQ's looking to take these lows. They might not be playing. They might not be playing, actually. The high volume node on NQ. Let me go back to NQ real quick. Yo, whoever's trading gold, we're trading at the point of control right now for the week. We're trading at the price level that had the most trading activity. And yeah, that's the end of that sentence. All right, let's go back. This is the, what in the world? Oh, there we go. Yo, volatility is really dying right here. You can see even the aggressive orders, the market orders. The orders in the market are kind of just going flat right now. I mean, not only by the volatility kind of just looking like it's dying, but also you can see the delta is getting a little quiet here. So we'll see what the market is prepping for. I've got runners from 492 on NASDAQ. Nice. On what platform you use order flow? I want to use order flow, but I don't know where to buy it. I use XO charts, hotkeys, Hawkeye, hotkeys. That's how you know we're traders. This is hotkeys, Hawkeye. There you go. I dropped the IG handle right there so you can message. I'll get back with you with the order flow cheat sheet. There's a volume anomaly on the profile. It needs to be smoothed out. What time is it right now? It's about 9:30. We're about an hour in. Do you use Mac or Windows? I'm on Mac right now, Jonas. I know. I don't know how much longer I'll be on Mac though, to tell you the truth. To tell you the complete truth, but I love Mac. I mean, I'm in the ecosystem. So that's gonna be a tough one. And unfortunately, unfortunately, but I really enjoy the Apple mouses too. Like, I think this is one of the most like hated items on the market, but I think I'm just used to it. I've been using it for like 7 years. I think it's so convenient. like being able to just swipe on top of the mouse and, move the screens. It's almost like a touchpad on your mouse. We're gonna wrap here. We'll be back later this evening. We'll go live and we'll do a little recap on what happened with FOMC and the interest rates, and then we'll be back and we'll prep and game plan for how we're gonna attack the market for Thursday and Friday. So, uh, I will be live on the Tasty Live Network today at 1:45 Central Time. So I'll be on there with Dr. Jim. We'll cover some of the options positions that we have on. We'll talk a little bit about the FOMC announcement. So we'll be live on that network. So come hang out with us for a little bit. I feel the best footprint software are for Windows, bro. No, 100%. I mean, ExoCharts is probably the best software that you can get for a for a Mac. I think ExoCharts is better than, for example, like Sierra Charts, Atos, those platforms. I think they're native to Windows, but in my opinion, I think ExoCharts is pretty much just as good. But either way, they're natively developed for Microsoft and Windows, so they're always gonna run a little bit smoother on there. That's why I'm gonna be excited about that too. Like, I think once we switch to a PC, I don't know how much I'm gonna enjoy using a Mac anymore. Because that is annoying. Like, there's a lot of softwares that don't function properly on a Mac operating system. I'm new to it, but really want to start using order flow in my strategy. I got you. We'll be live here a lot more often, so catch us here again tomorrow morning. We'll be back here at Market Open tomorrow morning, so we'll be trading together. And if anybody wants that free order flow cheat sheet, message me on Instagram. I'll get that to you. And then you can research any of the concepts that are on there so you can dive deeper on your own. But we'll call it a wrap right there. We'll see what the market does ahead of this FOMC announcement. But I will be live on the Tasty Live Network. Be sure to come and check us out. We'll be live with Dr. Jim, and we'll talk about some of these other positions that we got on. Did anyone spot the passive sellers? We've been seeing a lot of passive sellers, buyers, a lot of that stuff this morning, Charles. But we're going to end the stream here. We'll catch you guys later. Thanks, bro. You seem to be a really cool guy, to be honest. Appreciate you, Jonas. I'll catch you later too, bro. All right, later, guys.